The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So as we've been doing all this week, we're asking our panel about stocks they would buy on the dip. So let's get to today's suggestions, beginning with Jason, who's nominated Northern Star. Interestingly, Jason, Northern Star has been on the show every day this week. Many seeing a buying opportunity here. Why have you picked the Goldie?
Yeah, look, I think it's a really interesting theme this week around, what do you buy when markets are falling heavily? And I'm sure plenty of people would think it just makes sense to buy stocks that other people are panic selling. But I think the problem is, what if the panic turns into a longer lasting bear market? So none of us know. We don't know how this is going to play out over the months ahead. So I asked myself, do I want to be jumping out in front of a freight train and then just punting that it's going to stop and go back the other way? So yes, it might, but maybe it doesn't either. So my first priority comes down to managing risk. So I don't want to buy any stock that's in free fall. And like people hear blood, you want to buy when there's blood on the streets and buy low and all this type of thing. It all sounds good, but when you do it in practice, stepping in front of something which is falling heavily and saying, look, I'll take your stock, I think it can be a risky proposition, particularly when those stocks are below their 100-day moving average. What I would consider buying, though, is a stock which is still in an uptrend, but then falls back to its 50 or maybe 100-day moving average. And we've got this chart of Northern Star up here now. The two moving averages I have are the 50 and the 100-day moving averages. And you can see that blue circle I have on the chart. That's where prices fell to on Monday. They briefly came back to the 100-day moving average, closed on their high for the day, and then hit a new high on Tuesday. So I'd consider buying that now. So what we've got with Northern Star, we've got a stock that's showing both relative strength and absolute strength in dire conditions. That's the sort of stock I'd want to be putting in my portfolio, not one which is just careering lower on the hope that it's going to find support and turn higher. If we are going to buy into extreme weakness, the only situation I would consider would be long-term dollar cost averaging into an index ETF. And I think that's likely to pay off over time because it's highly unlikely that we'll never see another all-time high in the ASX 200 or the S&P 500, whatever it may be. But as for individual stocks, I think too many things can go wrong. If you pick the wrong one, it can be a disaster. So I think the play is focus on risk first and then upside potential second. I think too many people do it the other way around. They see the potential upside, but they don't pay enough attention to the risk, and that's where the trouble can come in when things don't go to plan.
All right, so that's Jason's pick, Northern Star. Ben, you've gone for GQG Partners, the global asset manager. Why is that?
Yeah, I suppose we'll take a bit of an opposite view to Jason there. Yeah. I think there is good value in the gold sector, and it's been a good place to hide, so to speak. But yeah, GQG Partners is a global fund manager that we've brought along to the table today. And I think the key here is that we think it's impossible to time the exact bottom of the market here. And, you have a 10 or 15% pullback in global markets. However, it only, as people have been saying, it only takes one tweet to potentially have a, 5%, 10% bounce in pretty short order. And if you're caught on the sidelines or playing too defensively, that can kind of work against you as well. So we've gone for GQG Partners, which is a global fund manager that floated. It actually IPO'd at $2 back in 2021. And funds under management have grown 78% since then. And the share price is basically flat since it floated.
Yeah,
it's gone nowhere.
To where it began.
It has paid dividends. It's yielded about 10% per annum since it's listed, so that's something. But yeah, at current prices, they just had some funds under management numbers out today, and the stock was actually initially sold off a couple of percent in line with the market, and then I think some buyers have come in seeing that positive data. They've had net inflows of almost $2 billion US, which in March. So, in a tough market, that's a great result. And yeah, strong inflows year to date. So that's one which we think will really benefit from a shift out of US equities into more kind of diversified global exposures, including emerging markets, which GQG is kind of, I would say, a market leader in that space. So yeah, that screens as really attractive value and is still growing. So if we do see the market tick back up again, we think that's got pretty good upside to kind of high $2 or up to $3 per share.
There we go. There are our two picks for the day. Jason with Northern Star and Ben for GQG Partners.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.